Welcome back to Krown's Crypto Cave, getting ready for a brand new week of new opportunities after a very lackluster Sunday. But I do want to follow up on the short and medium term timeframes. We have CMEs open for trading once again, even though it is technically a holiday, but it is of course futures, so it doesn't really matter. And so there's plenty to talk about there, and actually a few things form themselves in the short and medium term timeframes, which I think are of note and of interest right now. Anyways, putting the interest on the Krown trading application over here, which can be found at app.krowntrading.net. What do we see? We see that open interest come down about $250,000 right there. Not much to make out of that. Bitcoin dominance really has found its range, but overall, I do believe that we are seeing it put in a major low there, as we showed in yesterday's video, and very likely going to force many alt pairs versus their Bitcoin counterpart back down probably to range lows, not just range lows, but like the overall lows for full retraces. And perhaps we'll go over that in this video again today, although I suspect that we'll have more things to talk about. So perhaps just if that is new to you, maybe reference yesterday's video. But overall, if the altcoin was around for more than 2-3 years, a lot of them are looking like they are not so healthy against Bitcoin. But that does not necessarily mean that they're going to be doing bad versus the US dollar. We do not know that. We can't make that inference right now, but it would still be of interest for the altcoin traders over there, as I'm sure. There's plenty watching a channel like this, perhaps. Maybe not. Who knows? Anyways, fear and greed index pretty much standard at that 41 read right there. And yes, the sale for all the programs for my birthday a week ago is still going for another day and a half, it looks like. And no code is needed. It's 20% off of all these programs. I won't go through the full explanation on all of them. Just watch the videos that accompany them. As always, make the decision for yourself. It's you are an adult after all. Well, at least assuming that you are watching a channel like this, and so you're more than capable of making a decision for yourself. However, from my own point of view, as always, I want people who are actually interested in these sorts of things to make sure that they actually have enough time to invest in them, because that's really the only way that you're gonna get anything out of it to begin with. And of course, I always want to be very forthright in telling you that, hey, you can do this. You can actually do this. It's quite fucking difficult, and it's one of the most difficult things that I've had to learn in my life. Some people have an easier time than that, of course. Some people have a more difficult time than that as well. And there's no magic pill for that sorts of things. So even if you do, get into a program like this, if you don't put in the work, if you don't actually like practice the materials, if you don't come back and reference it, well, probably not gonna have too great results, to be quite honest with you. So I always want to be a little bit more erring on the side of negative when I talk about these programs, because if I can turn you off with a statement like that, then you probably weren't gonna get through to begin with. And I don't mean that in like a mean way. It's just you don't want to waste your time, of course. Anyways, the Neophytes program over here, this one's more so for beginners. Again, watch the video accompanying it, because it could be that you are already actually above the level of content within that one, but that one's for the absolute beginner, and certainly much less of a time commitment than these two programs right here, and much less of a financial commitment as well. The Master Your Options program especially is not only those things, but also it has a massive steep learning curve, because, well, we will take liberties knowing or thinking that the basis of TA here, but also just options in general take a little bit more I guess groundwork to be done before you can actually get into the fun parts of them. The reason being because, well, it's not so intuitive, I suppose. Anyways, Mr. Mournfall himself, the creator of the Jewel and this application as well, has his PineScript Mastery program, which will teach you how to program indicators in the TradingView native PineScript, what's called language. And then, of course, in our partners tab over here, we got Jackie. He's a very handsome Polish fellow, and he has his psychological program, which we're happy to host as well. Jackie's the guy who I reference when it comes down to psychological topics, especially with regards to trading, mostly because, like, I could give you all this information and whatnot, but at the end of the day, the reason why I like him is because he gets fucking results, man. I know people have worked with him personally, multiple people actually, and they all have good things to say. So I'm more than happy to support something like that. Anyways, and of course, Bali's got his own indicators here too, not on the actual app itself, but in the link in the description below, for anyone who happens to have an interest in those things too. And well, you probably have seen me reference them more than 1 million times on this stream. So check them out if that is of interest to you as well. And they also have a 7-day free trial too. So it will let you kind of get your feet wet with it and figure out if it's for you or not for you without actually committing yourself. Okay, cool. So starting off over here on Bitcoin. Picking up where we left off yesterday, I do think that it is important to say that CMEs effectively have filled the gap as far as I'm concerned. Could it pop back up towards 10,450, 10,500-ish region? Yes, possible. But overall, the way that we opened up lower and tried to rally on the 4-hour, Looks to me like we're getting ready to test lower first and foremost rather than test back up. And looking over here at spot price action, what do we see? We do see that we have hidden bearish divergence in progress on the 4-hour dildo time frame right here. Is it fully confirmed just yet? I mean, do you consider this a confirmed local high? Technically it is not a confirmed local high just yet, but I would say that this looks very, 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 very likely to do such. All major moving averages do even have a negative slope on a on a short-term time frame like this, and trend. There you go. High, low, low, lower low, lower high. And what do you think comes next? Probably another test back down towards that $10,000 region. It does not imply, however, a breakage of $10,000, but here's where we can start to put some tools together. And if we do see, first and foremost, any sort of a 2-hour or 4-hour dildo extension closure below 10,150, yes, that would initiate another move back down at the very least to actually not just 10,000, 9,950. Tight ranges here. It's only a $200 move, but this is a very short-term time frame. And realistically, could we get another wick into this blue box territory right here, similar to what we saw on the 5th of September? Yes, and that's a nice zone between 97 and 9800-ish region, which would start to err on the side of filling the lower gap on CMEs, coming in right around here from what was it, July of this year. Anyways, going back into this chart right now, we do want to match this up with one of our other tools. Shout out to, this is actually the one that I was just referencing, or one of the ones that I was just referencing with Bali's toolbook. And we do see that any sort of a 2-hour or 4-hour dildo closure below 10,200 essentially will turn momentum oscillators back onto the downside. So not only would we very likely be breaking this horizontal right here, which then governs another move back down to like 9950-ish region, we'll call it. Maybe even extend that down and another $150 down to 9,800 base. Don't know where these wicks turn back down towards, but when we match these things up, it would also imply that we'd have a confirmed lower high, which initiates hidden bearish divergence. Plus, we'd see 4-hour momentum oscillators turn back onto the downside, yet rejecting getting out of the neutral zone. So just oscillating between the bearish control zone and the neutral zone the whole way through. So this would quite literally be a bearish reset and give us plenty of fuel for some more downside displeasure if you are on the wrong side of that, if you're on the wrong side of that colored dildo. Anyways, so looking at this right here, it is still the same ranges as yesterday, essentially. I don't really have anything to add on to that. And in fact, that might make this video a little bit shorter today, although uploading time is going to be a lot longer now that I'm trying to record this in as high a quality as possible. And maybe even I can learn how to speak English at some point too. Anyways, looking at the 3-hour right here, do we already have a confirmed lower high? Yes, indeed we do. And we have that same sort of hidden bearish divergence as you would suspect. So that is going to further verify that this is likely to come back down and test to those lower numbers. And we do see from the reverse stochastic indicator, where do we turn momentum back onto the downside? Any sort of a 3-hour closure below 10,100. That'd also be of interest because that would be, well, closing below or on this low right here that we saw printed in on the 5th of September as well. So continuation, again, lower highs, lower lows, putting in what would also be considered a descending triangle at the same time. And because we do have that in the cards right here, let's just see what sort of target that would print. I'm going to do like a very bad measured move off this. I'm going to imagine it probably points down to, oh, what do you know, the bottom end of the next blue box territory, right around about 9,700. So if we do break that area, do I think that we get a wick down somewhere around 97? Probably yes. Where does it close at? Who the fuck knows? Doesn't matter. But, well, it actually does matter. But more importantly, we can't make inferences on that until we actually have it. That's why I go range by range rather than crystal ball by crystal ball. I just don't think that can work. It's not real as far as I'm concerned. It's not real trading, even though there's plenty of people on all social media venues who will have you believe that. That has not been my experience after trading around some of the best traders in the world. On the floor of New York Stock Exchange, ARC, and then later SIBO, Chicago Board of Options Exchange, which is just a fucking mouthful right now. Anyways, buy hourly is already turning down, already confirmed a lower high right here, and has that same sort of hidden bearish divergence in play as well. It does look to me like we're probably going to come back down, again, 99.50-ish region. Buy hourly Stokes popping down from the critical zone as well. And we do see that is going to maintain its downside posturing as long as we're closing 2-hour dildos below 10,300. And we got our next one closing in 1 hour and 34 minutes, and that's also going to come alongside the 4-hour as well. So all these things have interplays with each other, and we do see the lower time frames actually starting to lead the higher term time frames timeframes, as you would suspect during something like this. Doesn't always happen like that, which can be sometimes an indication that we are not, or we are not doing that. But in this case, it looks like all lower term timeframes are in unison right now. Hourly also leading the bunch to 10,250. Momentum remains to the downside as long as below there. Same sort of hidden bearish divergence all the way back up towards this September 4th high right here at about 10,602. So, to me, it looks like not only do we have trend, we also have pattern, descending triangle. We also have momentum, and we also have divergence plays. And I'm sure if we were to look at historical volatility percentile on the very, very low time frames, it's probably suggesting that we're going to be seeing a move relatively soon. And we can do this on like the very, very, like this is really the only reason why I ever actually reference a very low time frames, like a 15-minute like this. Historical volatility percentile getting this low and kind of like trending down after a nice session like this is going to give us a good read on when we actually do expect a move like this, and probably sometime around this early morning, it looks like. Are we on the 7th? Yeah, we are on the 7th. Why is this not matching up with my time? Oh, it is. It's just, wait, no, it's not. I must be on the wrong time zone. Oh, I'm on UTC -5. Well, fuck it. That's not what I want. I want, where's Eastern European time zone? There we go. All right, cool. Yeah, anyways, that would still line up about middle of my day, so probably early American morning. So probably by the time that, you would expect traditional markets to start trading around, we probably should see, or that would be likely to see a move outside of this range. Anyways, let's see. What else we want to look at? So we looked at all the lower term timeframes right there. Let's go look at the medium term timeframes. Are they matching up with anything else that we see? We do see that 10-hour momentum is actually to the upside right now. I really dislike trading against 10-hour momentum, so that does tell me that, hey, while Bitcoin likely does trade back down here and test around that 99.50-ish region, maybe even a little bit lower than that, do I think that it's going to break lower right here right now? Probably not. The reason why I say that is because not only is 10-hour momentum to the upside, but also we do see that bullish divergence is building here as well. In fact, we already got 1-2 stabs. That one's played out, correlating with this low and this low, and that producing about a $600 move. Is that right? All the way from 98 to 10.4. Yeah, about $600 move, or even a little bit higher than that. Yeah. Just slightly out of range, but I do think that we're going to put in a third drive here. And more importantly, it would also suggest that as long as we're closing 10-hour dildos above about $10,000, is momentum likely to turn on back to the upside? Yes. I mean, that's exactly what this is suggesting. So if that also would, by contrast, mean that if we do close below that region, momentum will open back up to the downside. And then we can talk about the next major area to the downside that would be very likely targeted. In this case right here, that would be this area right here, right around. It's starting to get actually quite difficult because there's not really too much there's actually quite a bit to be going off of right here. But I suppose theoretically speaking, 9,500 is where I'd be looking towards next for another short-term bounce, or actually 9,450 if you want to get super exact. However, I don't think that would actually bottom it. I actually do think that Bitcoin would very likely fail that bounce if it does break and close higher term timeframes below 10,000 and head ultimately for about 9,100, at which point I do think that Bitcoin could once again have a potential major reversal point. So tentatively speaking, the way that I'm looking at these charts right now is Bitcoin very likely does test again to the downside, but there are a couple areas of caution that I'd be looking for. Extremely likely a bounce, but potentially reversal as well, if the macro trend is still to remain to the upside, which I actually do think that it is. So as always, have to really differentiate my views here. Short term and medium term, yes, bearish. Long term, ranging more or less, essentially, because we kind of already filled this area out. I guess if I had to kind of call it, I do think that Bitcoin does test a little bit further down. But the macro trend, speaking towards a monthly, bi-monthly, and beyond, I'm not bearish on that. I'm actually still bullish on that because, well, it's an uptrend as long as we are above, well, let's just go look at it. It's an uptrend as long as we are above where? Above about 7,000 especially. And guess what? Momentum to the upside remains to the upside on monthly Stokes as long as we're above 7,500 on a closing basis. That leaves up about a $2,000, $3,000 range from right here. So take that as you will. It's not all that helpful if you're a shorter term trader, but if you're long term, long-term hodler, long-term investor, perhaps that does mean something to you. For myself, not really. Actually, this is what I do. This is just as just something that I look at for analysis. I don't really care what the long term is, to be quite honest with you. Obviously it's a lot easier when things are just generally up, but when we're playing with the big ranges here, we have to really realize that we can maintain an overall monthly uptrend and a bi-monthly uptrend by that extension as well, and come all the way back down even to 7,500. And I looking at the bi-monthly especially, move back down to 9,100 is certainly not out of the equation right here, and it would just be a backfill of last bi-monthly open. And on top of that, bi-monthly Stokes, nice and erect, bi-monthly RSI flirting around with the bullish control zone, and we do have an uptrend here as well. So that's a hard chart to hate as far as I'm concerned. It's just big ranges, so does it help to just say, that, and just blindly buy here? Probably not. And, can actually even be a career ending move for the over leveraged people as well. Anyways, let me take this off for now. And looking at the daily, I think that the daily moving averages actually get it quite well. 200 exponential moving average kind of getting that 9,700-ish region. So that would be the lower end of the blue box that we were looking at earlier for the more recent one. And I do think that that would be another short-term, medium-term bounce from that region. Probably test back around 10,000, maybe a little bit above. Maybe it even is a reversal as well, as we did say. Personally speaking, I do think that things are a little more likely to test back down here towards about 9,100. That's also synonymous with the daily 200 simple, with the white moving average, and also the blue 3/7 exponential moving average as well. And you also see that area overlined on the bi-monthly that we just looked at too. That would be your backfill on the 10 simple, and very, very extremely likely a bounce right there. And I would even say strong potential for reversal as well. So I really have to be careful with my words, because I can be talking about bearish things on short-term time frames, but that doesn't necessarily make me bearish on a monthly. An hourly has very little semblance to a monthly. Looking at the daily, by the way, or actually before we get to the daily, let's finish the 12-hour. What is the 12-hour saying right now? Has that same sort of bullish divergence being built up, but I do think that we're going to come back down and set in another third drive, and that probably does come alongside another test of like 9,700 or 9,750-ish region. I do think that that looks quite likely here, and momentum will remain to what side on this one? It will actually remain to the upside, or sorry, it will cross the upside if we close this next 12-hour delta above 10,375, which is essentially above that last printed high that we saw on the prior 12-hour delta right here. So essentially what it's saying is, as long as we are below that level, we will see this actually pop on back down and very likely test back down around our lows of 5th of September, whether that's a range between 97 and 98. I don't have a strong opinion on that. Just anywhere in that $100 region right there, very, 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 very likely to get tested, assuming that condition is met on the next closure. Do we have anything else? Maybe on daily. Daily momentum will remain to the downside more aggressively as long as we're below about 10,900. And again, same sorts of interplays with the moving averages right there. We kind of already spoke about that. Daily Jewel gave you a pretty decent sell signal right here on the 18th of August, a continuation sell signal here on the 2nd and 3rd of September. Do we have another leg down from that? Probably yes. But I do think that this one is getting close to, at the very least, a local low relatively soon. And of course, what would I denote to be wrong in this one too? Because I'm wrong all the fucking time, especially in my opinion. Ranges are something that I can trade off of and not go broke. In my opinion, I would definitely go broke on. But looking at this right here, I'd actually still be using the same ranges as what I said before. Yes, we do have this ascending trend line right here, but I wouldn't trust it. If Bitcoin does break back above it, it doesn't mean all that much except for like a very short-term time frame trade. It's still this area right here, especially on a 2-hour or 4-hour delta closure above 10,600. If that condition is met, if Bitcoin were to close a 2-hour or 4-hour above this region, I would look for another quick extension all the way back up here towards about 10,850 to 10,950 towards this blue box. At that point, that's where the long term can actually change again once the upside. If Bitcoin starts closing, especially 12-hour or daily deltas above this region, I do get bullish on the long term once again, and by extension, the short and medium term, just because, well, they're going to be going up along the way, even above 10.6 right here, of course. But the big thing is that as long as we are below this region, it is still a downtrend on the daily. And so I would be rather defensive against that, even though I do think that Bitcoin's probably closer to a bigger bounce than not on the greater scale of things. But don't get that confused again with the short term. Could use a 4-hour on this area as well. Probably yes. 4-hour closed above 10.8 probably does it as well. And then, short term, that would drive targets back up to about 11.3, and this would start to look, like a major low right here, which would be quite nice. But for now, I would still err on the on the side of caution for short-term downside, medium downside as well, and then long-term starting to look for divergence plays. But I still would not be calling any major low without, at the very least, bullish divergence on like a 12-hour or a daily. We do see it on a 4-hour. We spoke about that yesterday. We did see the move already happen from that, like we spoke about, all the way from 99.50 to about 10.4. I believe that that's already played out. And we're probably going to come back down and set in for a third drive of it, and that's probably going to be the one worth playing in my opinion. Again, price action remains to be seen, but as far as that stands, I'm curious what CMEs are suggesting right now too. CMEs are suggesting a little bit more of a potential short-term back up towards like maybe 10.4 or something, but that would just be another lower high. And if you look at it from the very, 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 very low time frames, which I do not think is the right way to be doing this, you would actually see an obvious gap right around about 10,580 region as well. But here's the thing: this is why it's not a gap, because this is your 4-hour. That's not a fucking gap. Just silliness, crypto silliness, And daily looks all kinds of weird here as well. But overall, daily momentum is just freshly crossing on back to the downside, rejecting getting out of the bearish control zone, and will remain to the downside as long as we are below 10,800-ish region. So again, that is further verifying that area as a as kind of more of a long-term pivot. And if Bitcoin does get back above there, hey, good things for the BULOS once again, very likely back up to 11.3 and beyond. But as long as we're below there on a daily, it is kind of a hard chart to love. And looking at the daily RSI, we're just getting into the bearish control zone right now. So overall, can this have some more to go? Yes, absolutely. Daily Jewel is sloppy down, sloppy Joe's and down. I'm curious if there's anything on the 4-hour here as well. No, not really. Another 4-hour closure below 10,250 on CMEs probably does turn this one back down though. That will turn for momentum to the downside, confirm this is continuation, and very likely initiate another test back down, probably towards that 98 or 9,700-ish region on a wick, and we'll see where that closes. Anyways, let's see how long I've been talking here. 21 minutes. What the fuck, man? How can you even say things for that long about an inanimate object? Let's go take a look at our secondary chart over here. What do we see on the Trollinger Bands, the Trollols? We do see that Bitcoin actually did pop its way back up to the to the bottom side Trollinger Band. Did close inside of it, but it's not until we get an open and closure inside of it where I'd say that this trend is starting to really lose its momentum to the downside. Daily MACD histogram is, the histogram still increasing overall, but it does seem to be starting to line up on this current hump that we're looking at right here. So, could we get another wick back down, close back above the the bottom side Trollinger Band, and then potentially have a low in there? Yes, possibly yes. But, now we're getting into crystal ball shit once again, and realistically want to see things set in stone first before like actually projecting that sort of a thing. Overall, if we were to close below the bottom side Trollinger Band, which by the way right now is at $10,000, yeah, 10,050 if you want to be super exact, that would be another great indication that we are very, very likely to move back down and test around that $9,100 base. 9,100 is also very much of interest due to this region as well. Looking at over here and just showing the confluence between it. The volume profile shown for this session does show big activity. Actually, more so around 9,500-ish region. Interesting nonetheless. But you do see that this area laid in all the way down to about 9,100 is pretty thick AF, if you want to call it that. So anywhere within that region, I do think that we could start to very strong contender if Bitcoin does get down around there. For a potential major low. Of course, if things were to break there, then cue Lexington Steel sound, probably all the way back down towards 7,500 base. Long term, would look pretty fucking nasty, man. Would look pretty fucking nasty. Anyways, as it stands for right now, Bitcoin still maintains weekly closes above the 21 exponential moving average, which I do think is of note here as well, just because of the thing that we spoke about over the last few weeks, and by extension the last few years. Actually, we've referenced this concept, but just briefly talking about it right here. Anytime that Bitcoin's been in a macro uptrend or downtrend, the yellow 21 exponential moving average has been kind of used to rally off of or sell off of, depending upon the trend. And in this case, when it's an uptrend and it has a positive slope, those are your bullish dumps that should be bought up all the way up through here. here all the way up through here, and on the downside, those are your bearish pumps that should be sold into. Same thing over here again, and once again over here we do see a positive slope on the 21, and we are above it, and we just dumped down about 20% to it, which is very, 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 very similar to what we saw over here in this whole run, and actually by extension pretty much all the runs in Bitcoin's history. Whoops, wrong button. But basically, on all of these bullish dumps, you see about a 20 to 25% move to the downside. So that one right there from top to bottom, that one right there about 26. Actually, both those were 26%. This one, another 25.5%. Actually, no, they're not 20%. They're about 25 to 26%. 34% on this one right here. This one about 34.5% right there. This one right here, that's 25%. And as of right now, as we just showed, we actually already have dumped this one about 21%. I'm curious what 25% would look like. Isn't that interesting? That would put us right around that 9100-ish region. Actually, a little bit higher than that, 9300, but anywhere within there is about good. But here's my point, is that as long as we're closing weekly deltas above the yellow 20-minute exponential moving average, and it does have a positive slope, historically speaking, this has never been wrong, and it would be unwise to trade against that as the greater macro trend. So I do still consider this an overall a long-term macro uptrend as long as we're doing that. But again, could we get a wick below? Well, of course you can. I mean, look at what happened right over here. This was like a 15% extra wick below the 21, still got bought up and closed above it. So it doesn't necessarily mean that we're not going to go lower. It just means that until we actually close lower, I'm a little bit skeptical of calling a major reversal here, as we still do have an uptrend on the weekly as well. Anyways, weekly momentum oscillators are coming down quite aggressively here. Weekly Stokes coming nose diving through the area. And they will remain to the downside as long as you're closing below 11,900. So relatively likely, to be fair. And weekly RSI, do we see anything of interest here as well? Potential hidden bullish divergence could be built up between this prior low right here and if Bitcoin were to put in a low right here, but that also implies we must put in a low first, but it is in play because we do have a slightly lower low read on RSI. So if it were to put in a low here over the next couple weeks, it's not happening this week, it's not happening next week, maybe, or actually it could happen next week. But it at least, at the very least, take 2 weeks, maybe, and probably even 3 or 4. Then yes, it could be in play. But for right now, it's just a potential as long as we don't break below that level, essentially. Anyways, okay, so traditional market's not going to be trading. Futures are trading, so there's not really too much to talk about here on futures that I haven't already said on Saturday morning. I'd be looking at the same things. Any sort of a move back down below last week's low on all the major indices is likely going to beget continuation. In this case, for NASDAQ futures, probably back down to about 10.5. Medium term, short term, probably 10.9 region. E-mini futures for SPY, same sort of thing in here as well. Taking out last week's low, I'd look for a quick move back down to about 3,300, and then probably extension down to 3,200-ish region. This is the first time in a very long time where it's actually felt like we have a potential reversal in play. And here's the thing, if you haven't been watching for a while, we hit this target that we had in for fucking months at the 4.236 Fibonacci extension, also lined up with one of the expected move cones as well at 12,450. That was generated all the way back on over here in May, June of this year, and very rarely do you even see those sorts of levels being hit. But overall, this is a time to be cautious, and I do feel like I'd still be cautious on this one. Probably not going to see all that much today because it is essentially a holiday for the US. But tomorrow, if you see this one take out the low, especially around US Open, that's going to be a good indication that we probably are going to be heading lower. And here's the thing, and here's just a general rule of thumb. This is a long weekend, right? So when you have a long weekend and you have a strong close on the Friday precipitating that long weekend, so in this case we had a strong down close, usually people are going to sell after after the weekend ends. A lot of panicking goes on. You have a 3-day weekend, you feel uncomfortable about your positions, and you think about it over the weekend, and you're like, well, maybe I'll just sell it because most people, well, maybe not most people, but the smart people were long all the way from here, which is where we know. I mean yes, we did call major lows right here in end of March and early April, but that's that's the people who are selling right now back around here. I mean, this is after a pretty phenomenal run. This is a 66, almost 67% run. I mean, pretty fucking good. So how greedy can you get? Well, if you're in cryptocurrency land, pretty fucking greedy actually, apparently. Anyways, not really too much else to update there. Maybe we can look at euro dollar really quick too. I don't expect too much to happen today, but expectations are a trader's worst friend. So take that as you will. I do think that we're going to test back down to the 10 simple at about 117. I do think that this is very likely lining up for a major high right here, but it's still the same thing that I've been saying for more than a month now on this one. As long as we're closing weekly dollars below 119.5, I do look at that as this is a major high. The second that we close a weekly dodo even above like 119, or where's this area right here? Yeah, just a smidgen above 119. Is this potentially not a major high and we're going to see continuation all the way up to 121 relatively quick and then 1.25? Well, yes, but for right now, that that criteria still has not been met. And I think it's a lot more likely that we're going to put in a major high around the monthly 200 exponential moving average, which is currently not on my charts. Charts, show me the magical ways. There you go. Represented by the purple moving average right here. And it's basically an inverted chart of what we look at on Dixie. And this is really important to be aware of, mostly because, well, everything trades against the dollar. It's kind of like the world reserve currency right now, backed by $10,000 newts, not $10,000, but 10,000 nukes. And good luck beating that. I still think that this would take months, though, to kind of bottom itself out here. And I do actually think it's very possible we get another move back down, just slightly lower towards 91.25 region. But overall, this is in a bottoming area right now. And so I do think that it's wise to be cautious within this region. I do think that maybe over the next half year or so, probably does test back up towards $95 and maybe beyond. And if it does test back up beyond $95, then you're really going to see a lot of things come crashing down versus the dollar. Maybe not everything, but definitely the weaker ones throughout this past rally, as anything that could rally did rally over the last few months. And if it did not rally, that is a very, 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 very bad sign. Anyways, let's go check out Mr. Buteral. How's he doing? Oh baby, oh baby, oh baby. It looks very similar to Bitcoin, except much greater ranges. Daily still bearish here. Daily Jewel giving you a very good sell signal right here. Very, very good sell signal on the 18th of August. Did not get the overall high, but got a pretty damn good one. And then a continuation signal here on the 3rd and 4th of September, which we've already played out a pretty nice move down from there. I mean, that was this whole move from Jesus, man, from the 21 test all the way down to where we are right now, kind of 22.5% move from top to bottom thus far. But I do think that it still is a little bit more. Daily momentum will remain to the downside as long as we are closing below where? 433. Seems rather likely right now. And daily RSI, are we showing any sort of divergences here? No, not at all. In fact, what about a 12 hours? Anything of note as well? Looks like it wants to test back down towards 320, maybe beyond, maybe all the way, maybe a wick down to 300 again. No divergences to be spoken about here as well, although it is building. 4 hours, same thing. No divergences to be spoken about here as well. It does have hidden bearish divergence between this point all the way up at almost $395 and where we are right now, just below 350. So looking kind of nasty. Any sort of a 4-hour closure below 347 essentially, very likely does beget another test down to 320. Not looking too hot right there. So I'd be overall looking for another sweep of the lows in most crypto assets. I imagine that most everything looks similar to as we typically do see. But let's go take a look at the Bitcoin dominance chart really quick. Let's go to the month, or sorry, the weekly, and see how this one's set in. Yeah, I call me crazy, man. I think that we're about to see the next catastrophic meltdown for most altcoins versus Bitcoin. Maybe not all of them. Probably not all of them. That'd be naive to say. Yes, there's going to be some winners. Probably, if I had to guess, it's probably going to be Link if the last 3 years is anything to go off of. But most alts are very likely to go for a full retrace over the next like half year to a year from this point. I do strongly believe that actually. I'll show you just a generic example right here because I think it represents most altcoins in a very in a very diabolical way, but I actually love it. Cardano, right? So Cardano puts in a phenomenal rally, pretty much in the same way that most other things did. This one didn't have like the most impressive rally, didn't have the worst rally. It's kind of like the Goldilocks of shitcoins. And looking at this one right now, what do we have here? Well, we have major hidden bearish divergence. Now, admittedly, this is pretty damn far away to be playing, but overall, just another lower high and a series of lower highs over the past almost 3 years now. And this one is very likely to come back down, back down towards 700 Satoshis. I would be looking for a bounce there, but I just don't see any reason why a 3-year long trend would be ending after something like this. It had its chance, it failed, and now all of the momentum oscillators are turning down at the same time. I mean, it is going to get a bounce from these regions as well. Don't get me wrong, it's not going to be straight down. That's why I do say over the next like 6 months to a year. But I do think that overall this thing will come back down to like 450 satoshis. We can also look at Mr. Buterin versus Bitcoin, which is right here. And what do we see here? Same sort of thing, just putting in another lower high in comparison to this high right here. Hidden bearish divergence has been initiated as well, although again a little bit far away. Momentum oscillators are turning down at the same time. Not good. Does have a trend line formed right there, but that also implies some more down along the way anyways, so that would be protecting against the bullish control zone. So how long can it take to get there? Well, quite long. Are there going to be bounces along the way? Yes, there's very likely to be bounces along the way. It's not just going to be straight fucking down. It's probably going to be a bounce somewhere right around here at about 3,200,000 satoshis, and then another one right here at about 2,800,000 satoshis, like big bounces I'm talking about. But overall, is a potential major high put in right now? Well, weekly RSI just got kicked out of the bullish control zone. So fair enough, not looking like the picture of health and fitness right now. What about Litecoin versus Bitcoin? This one never even got going. So sorry for all the people. I don't come to think about it, I don't really see people with like the Litecoin fucking emoji in there, or I guess they don't have an emoji, but the Litecoin symbol, and then like the rocket ship emojis on crypto Twitter anymore. I think that's a thing of the past. Like they all got washed out. Here's what the real chart looks like. This is the definition of a pump and dump. Pump it all the way up, dump it all the way back down. Pump it all the way up, dump it all the way back down. Pump it all the way up. I mean, what makes you think that anything different is going to go on right here? After not just 3 years, but this one goes all the way back, spanning towards its inception in 2014. And guess what? We're just in the process of turning weekly momentum oscillators to the downside, rejecting the bullish control zone along the way on what is yet again another lower high. Pathetic, absolutely fucking pathetic. This thing is amazing. It's amazing technology, and you know what? Krown's just being FUD. He's being a FUDder because he wants to accumulate your Litecoins low. Right. Right. Okay. All right. What else do we have to see? What about Ripple? Ripple would certainly never go down, would it? Well, on the inverted chart, no. Yeah, again, another shitty chart. Probably coming back down towards 1900 satoshis overall. Weekly momentum also is about to turn down freshly. Weekly RSI, major hidden bearish divergence, 1, 2, 3, even 4 steps on this one. You don't even see that all that often. Hello, Mr. Ripple Me Nipples.
Oh, God. Oh, God.
Mom? I'm not watching porn. Krown his fucking soundboard again. I swear. No, Mom, I'm not rubbing my pee-pee anymore. God damn it, Mom. Get the fuck out of my room. And that's when I thought to myself, it might be a good time. Never mind. Okay. Well, okay then. Let's go take a look at gold. What's gold doing? Very bizarre action here, actually. I don't know what to make out of gold. Now, the obvious answer would be, we have a series of lower highs right here, 1, 2, 3. We have basically the same lows all along the way. What would you technically call that? A descending triangle? Yes. Would that air the probabilities on the side of the downside? Yes. Is a jewel giving you a soft sell signal right here? Yes, it is. Is daily momentum oscillators turning to the downside and rejecting the getting out of the bearish control zone? Yes, they are. Is daily RSI showing us anything of interest right here? Well, not really, actually. Not really. I'd still be going off the same ranges. We could probably get rid of this range right here. Not too applicable to what we're looking at right now. We're going to move this one down right here, and a move above 1975 on a daily closure probably does make this look like an overall reaccumulation phase. A move back down below 1900 even, especially on a daily closure, and we'd very likely see another big drop back down to the mid to low 1800s region. And looking in line with the rest of the markets, is this one more likely to move to the upside or the downside? Probably the downside, but can we have another small move back up right here to test around, I don't know, maybe 1950, 1960-ish region? Yes, and that'd still just be within the overall range. I don't have a strong opinion here. Probably goes with the rest of the markets, which are looking mostly down. So fair enough. But hey, back above 1970 on a nice daily closure, even a 12-hour. and I'd probably flip that around, looking for a move back above 2,000 and probably beyond there. So, this one's still kind of floating aimlessly, but more things erring on the side of downside caution there. Anyways, whoa, we're 38 minutes into this video, and I guess it's time for me to start to wrap up. So let's look at the ranges here. I'm gonna let's actually go to a fresh chart or a fresher chart right here. I think it's just gonna represent the ranges better. 10.6 to the upside, I'd be looking for a move towards like 10.9, and that potentially could actually initiate the overall reversal above there, especially on higher term time frame closure. However, what's more likely and what I think is most likely to happen here is another test of the downside, probably around 98 to 9900 region. Do we actually close a 4-hour dildo below there or not is a real question. If we do, then we will be building some bullish divergences, but it also would imply another low will be put in probably somewhere right around 9,600. So extend that wick down another couple $100 or $300, whatever it ends up being. And as far as the daily goes, it's the same ranges as yesterday essentially. I do happen to think that we probably will officially test down to the daily 200 exponential average. And I would be looking for a bounce off there. If that area fails, though, 9,100 is where I'm looking towards. So let's go look at the probabilities over here, and we'll look at the probability of this one reversing on the upside as well, which actually we already have in at about 10,500 on a daily closure. 4-hour above 10.6 would have the same implications though. And to the downside, do we want to use 96? I mean, yeah, we could use 90. Let's start off with 9,800 for now. And let's see. Okay, so this is actually showing favor in the upside. So keep in mind that these do not have, well, actually these do actually have relatively similar implications, because above 10.5, that doesn't necessarily make me long-term bullish. It just makes me look for another test back up to like 10.8, 10.9. That's where I actually do get long-term bullish once again. Below 9,800, it's just continuation for a short-term, medium-term move. So the probabilities do favor the upside quite significantly here, almost by a margin of 2x, 28 and 3/4% versus 14 and 3/4%. Balling Pigs moms are getting more aggressive to the downside here. Actually, they are not loosening their slopes. Perhaps the error correcting MA is starting to. It is hitting the bottom echelon of this, and this actually has caught some nice lows in the. Well, actually, no, it hasn't. It hasn't caught. Well, it did get this local low right here before a decent rally, but after you then you got some more Lexington steel going on right there too, right? So it's not necessarily the best signal. This one right here was a pretty damn good one. This one right here was a decent one for a short-term move. This one not so much. And this one over here, again, a short-term move that eventually went lower. So it's, it'd probably only be short-term, but it is suggesting that, we are going to see momentum wane overall on the greater scale. But still, that probably comes with another test of the downside, in between there. So I think that's a good place to kind of wrap this one up. I want to wish you well once again. Take care, and until next time.